Guys, my name is Chantal Wilkins, also known as the Tax Queen, and I'm going to do just a little quick presentation on understanding your business incorporation because I do believe that it's super important for you to understand how to incorporate your business if you're really wanting to take it to the next level. So just a little bit about us is we are an online CPA firm. I do have a brick and mortar office that is located in Spartanburg, but we are completely 100% virtual. So we are able to help any client around the world. So again, my name is Chantal Wilkins. I am the business tax strategist. We have my partner, which is King Joshua. He is the business development manager. And then we also have Lucina Konate, which also is a partner of the CPA firm, and he is our CPA on staff. So our agenda today is I'm going to kind of summarize the entity options along with their advantages, disadvantages, and tax implications. I'm going to also define compliance tasks to stay in good standing, including meeting minutes and setting up your payroll. So as you guys already know, so the importance of incorporating and why you should incorporate. So basically, why you should incorporate is the liability protection of personal asset. Sorry, guys, that's not supposed to say assignments. It's supposed to say assets. And it's sorry. So I'm gonna have to go back and fix that. But it's also is to have a separate legal entity. It also adds like credibility. Also perpetual existence, and then tax flexibility and double expenses. So for one, by incorporating to an LLC or a C Corp, it kind of creates a bubble around your business that separates your business from the owners. So that basically, for instance, so if anything was to happen, then the client wouldn't be able to come to sue you per se to come after your personal assets like your home, your car, your boat, things like that you guys have that's personal to you. So the client would only be able to sue the business and not the person per se. It also if the judgment is entered against the business, then they can also post those judgments against the business and go after those assets for in the business. So 2 is the separate legal entity. So the separation of the business owners and the business as a sole proprietor, you have no protection. So the business as a sole proprietor, you are the business. So the person is the business. So when you go to the bank and you're wanting to get a loan for your business, it's going to be under your personal social security number and not your business EIN number, if that makes sense. So if you are a sole proprietor, just think like I am the business. But if you have an LLC or a C Corp, then your business is a separate entity. So it's kind of like its own person. So basically, so the next one is added credibility. So by putting the Inc. or the LLC by your business name, it kind of like gives your clients that sense of trust and credibility for them to be able to like, okay, well, they got their stuff together because they're incorporated or they are an LLC. So I can trust them a little bit more versus the sole proprietor that the business name just might be their name, or it just doesn't have like the LLC or the Inc. after it. And if you do have it, it just gives you like more credibility for your clients. So the next one is the perpetual existence. So with a C Corp or an LLC, so basically, God forbid, if the members of the shareholder like pass away in a sole proprietorship, then so does the business. So basically, like if I am a sole proprietorship and I'm, making over 6 figures and I want to pass my business down to my children for generational wealth. So if I'm just sole proprietor, like I can't do that because if I die, my business dies. So you want to make sure you're incorporating so that if you were to go on to the afterlife, your business is still able to be here to be able to grow and scale. And it could be ran by, like my husband or my children and their children and my grandchildren and so on, so that you'll be able to continue to build that legend that you guys started with. And 4 is the tax flexibility. So being incorporated, you have more tax flexibility. So you'll be able to get more deductions and be able to claim more credits because you are incorporated. So you'll have more of an option. So the next is what should be considered when you're setting up your business. So the types of things you want to think about is how many members will be listed in the business, and will there be one or more shareholders. So basically, when you're an LLC, you have members of the business. So the LLC is its entity, and then you have the members that are listed. So for the C Corp, you have shareholders. So on the C Corp, nobody, the business is its own entity. And basically you are listed as a shareholder, kind of like the workers of the business. So the next the next thing you want to be looking for is, will you need to obtain funding to grow and scale your business? So if you're going to need some type of funding, you want to make sure you're incorporated and that you have a business bank account so that you can start building fundability. So if you're going to want, if you're going to need to be able to build business credit, those are also things that you want to have in the back of your mind as a plan. Like, what do I foresee for this business 2 years down the road or 5 years down the road? You want to understand those things and kind of have that in the back of your mind of how you want to structure the business. So you also need to understand the business owner's personal liability in the company. So like I was saying before, if you are a sole proprietor, you need to understand how liable you are. You're 100% liable. So everything that would happen in the business, you're liable for the business. But if you are incorporated or an LLC or a C Corp, you're not 100% liable. And then also, you also want to be thinking about, will you have employees? Because if you have employees, you shouldn't be a sole proprietor. You might want to go ahead and incorporate to an LLC and or a C Corp. So those are also things that you want to kind of be thinking about. So the popular entity choices are the sole proprietorship, and which is also like a general partnership. So it's a general partnership if you have more than one person. So a sole proprietorship could be one owner, and that's why it's sole. It's because it's solely one person. And then if you have 2 people in a sole proprietor, it's now called a general partnership for the business. And then you also have the C Corporation, which, like I was saying earlier, it's its own business entity. And then you have the S Corp. And I want you guys to kind of really understand what an S Corp is. So an S Corp is not its own entity. So when I ask a lot of my clients, I'm like, how are you incorporated? Oh, I'm an S Corp. Okay, so you are an LLC taxed as an S Corp because you have filed the S election. So the S election is a tax filing election. It's not solely an entity. So you have the LLC or you have the C Corp. And the LLC can be taxed as an S Corp, and the C Corp can be taxed as the S Corp. And then, of course, you have the LLC and then the professional corporation. So again, the sole proprietor, so a lot of people go for the sole proprietorships because they are super simple to form. They're super simple to maintain. There's no financial statements or lengthy paperwork to stay compliant. It's simple to file the income tax earned by the business. Because it's also considered income earned by the owner. There is no separate or personal or any business assets. The owners generally have to sign contracts and paperwork in their own names, and the business does not have a separate identity under the law. So you cannot, and also you cannot gain business credit, at all, because it would be considered personal credit, because when you're trying to build business credit, you have to provide an EIN number. And if you don't have an EIN number, so that means you're now going to be a PG client, which is a personal guaranteed client, because now you have to personally guarantee that this loan is going to be paid back, and they're going to use your social security number to do so. You also won't be able to take out any type of loans or raise any capital for your business, because unless you do like a GoFundMe account to be able to raise business, operational costs. And then a DBA. So a DBA is also not just its own entity. A DBA means doing business as, which means this is just a fictitious business name. So basically it's an AKA name. Like, if my company is RBA Tax and Financial Services, but my DBA might be RBA Tax, just short and simple. So that's what the DBA is. The next one is the C Corp. So basically a C corporation is also referred as a general for-profit corporation. It is a legal taxable entity, and it is separate from its owners. So a C corporation stakeholders' personal liability is limited to the amount they have individually invested in the company. So in contrast, the owners of the sole prop or their partnership are personally liable for their business debts and their legal issues. So if, like I was saying, for a sole proprietorship, everything that's going on in that business, you're responsible for. As a C Corp, as an LLC, that's a limited liability. And then for the S Corp, you're would also not be held liable for any of the issues that's going on with the business. And then you also often hear, so a lot of people kind of shy away from the C Corps because it is double taxation. But because first the corporation, how it's double taxation is because it pays taxes on the profits, and then it has the individual shareholders also have to pay taxes on the dividend income that they have received in the business. So I do give a lot of tips of how to kind of not do double taxation. So you can also do a C Corp and then incorporate it as an S election so that you're not being double taxed on this. And I could tell you, more about it. I do have a corporation training, a business entity training that I will also be doing. So if you are wanting to learn how to set up business entities, that would be something that you guys can look into, and I'll put that information down below into the chat. But moving along, so even though forming a C Corp invoices more legalities and formalities for the cost, they are reasonable compared to other business structures. So they do not offer the same level of liability protection, growth, and potential tax flexibility. Okay, and then so the S Corp. So the S Corporation is an LLC or a C Corp that has elected the pass-through tax treated by the IRS. So like I was saying before, it's not just an S Corp. It's going to be like an S Corp taxed as a It's going to be an LLC taxed as an S Corp, or either a C Corporation taxed as an S Corp. But basically what this does is it allows the business to be a pass-through entity. So any of the income that the business would be making, it will be passed through to the owner, and that is reported on a form K-1. But moving along, so most of them are owned by the shareholder. So most of the businesses are already owned, they're owned by the stakeholders, and they are also ran by the board of directors. They also when you have a C Corp or an S Corp, you must hold annual meetings with the shareholders and the directors, and you got to document the key shareholder decisions and file a separate corporate tax return, which is an 1120S, that you'll have to, 1120S if it's an S Corp, and just an 1120 if it's just a C Corp. But the tax destination is granted by the IRS that lets the corporations pass their income through to the shareholders, which I was saying earlier is that, like, if you are just a C Corp and you want to pass the income through to the shareholders, which is the owners of the business, you guys would be able to incorporate as an S election with the IRS. And then we have the limited liability. So next to operating a business as a sole proprietorship or a partnership, an LLC is the least complex and the least costly form of business to start and maintain from a state compliance perspective. So an LLC is also considered a separate legal entity from its members. Its financial and legal responsibilities are also its own. So by default, an LLC is considered a disregarded entity for tax purposes, and business income and losses are passed through to its members, which is you, to file the tax return, which means that if you're going to file your personal tax return, you're going to also have your business tax return filed onto that schedule, your business, your personal tax return. So you will have the 1040, which will be all of your business, all of your personal information. And then you will also have a Schedule C, which will be for your business income. And if you have more than one business, you will have more than one Schedule C attached to your personal tax return. And then there are multiple types of LLC options available with provided flexibility on usage, setup, and ad management options. And here I kind of put like a little graph for you. And this is a chart that kind of summarizes the different types of entity filings and its requirements. So like right here, I have like if a sole proprietor, the formation, if you have to do a formation with a sole proprietor with the state and you don't. And then, limited personal liability, you don't have that protection. For the transferable of interest, you can't do that either. No withdrawal, you as a sole proprietor, you can't pay yourself. You can't like have a W-2 and pay yourself. You can't do that as an owner for an LLC either. So in order for you to be able to put yourself on payroll, you'll have to do the S election to be able to file as an S Corp to put yourself as an owner on payroll. So like I said, these are all of the lists. I kind of listed it out here for you. And then it's the same for the S Corp. So you are required to file with the state. You do have a limited personal liability with an S Corp. You are able to have, it's generally limited, but you're able to have the transferability of the interest. And then the duration is unlimited. So basically, if something was to happen to you, your business would still be able to be operational. Of course, with the right team in place. It is a pass-through entity, like I said, which means that if you have income, the net profit will be passed down to your personal taxes. You are able to have a shareholder. So for the S Corps, you're only allowed to have no more than 100 shareholders in one class of stock with an S Corp. For a C Corp, you do have to have shareholders because those are the people that typically own the business. And you don't have to have like limitations on the number of the shareholders. So basically, for the corporation, if you have 5 members, they can all own 25% of the business. So that they'll be able, 4 members, they'll be able to own 25% of the business to do, the 100%. Or you can have 100 shareholders and they'll own 1% of the business for you, as an owner. And then here, I also have another chart for you for the initial filing requirements. So these are what you would have to file like annually to stay in compliance with the IRS. So if you guys are looking to incorporate, you make sure you guys do contact us, because that is a service that we do provide for you. There are a series of questions that we would ask you before incorporating your business, just to make sure that it makes sense and that your business is profitable, to make sure that whenever you're going to the S selection or the C Corp, we want to make sure that the business is generating some type of revenue, because if you're just a startup business, the S Corp and the C Corp can get a little pricey. So you want to make sure that it makes sense before you incorporate your business. So some of the questions you want to ask yourself, if you're wanting to form a business entity. So if you're concerned about personal liability, so if you're running a business as a sole proprietor and now your business is grown over, 6 figures at least, and now you're worried about personal liability, it's absolutely time for you to go ahead and incorporate. So will you need to live off of your business profits every year? If this is something that you will also be needing to do, you want to also think about incorporating and selecting the S election, so that you can withdraw a paycheck from your business every week, month, or bi-weekly, however you want to do it. Are you looking to keep things simple? If you're looking to keep things simple and this is just going to be, something just on the side, then of course, being a sole proprietor is absolutely fine. And that's super, super easy for you to run in minimum paperwork that you'll have to file to be able to, to stay in compliance with the IRS as a sole prop. So the next question you want to ask yourself is, how long are you looking for your business to last? Are you wanting to kind of do this just to kind of make ends meet? Or are you wanting to do this long term, and then long term turning it into, generational, and, now my kids are working here, and, my entire family is working here. Now they don't have to go and work for somebody else, because we could work, together as a family. Those are questions that you also want to make sure you're asking yourself when you're forming your business. And then, so basically, we are, like I said, we are able to incorporate your business. And then if you are looking for a registered agent, make sure that you do have a registered agent, even if it is just yourself, on your business, because if anything was to happen or you got any type of notices, then that's one way that the state will be able to get in touch with the owner, is through the registered agent. And the registered agent will need to have a mailbox to be able to receive mail into, and it cannot be a P.O. box. So it would have to be in a physical building, brick and mortar building, for them to be your registered agent. All right, and that pretty much concludes my presentation. You guys can always reach out to us at support@rbafinancialservices.com if you are looking to form an incorporation or looking to get more information on how to form a corporation. Thank you guys very much for joining, and I will make sure you guys also subscribe to this channel so that you guys get all of the great updated notes and tax filing tips that we'll be giving out every week. Thank you guys again for tuning in.